The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Andy Duncan, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to this Gold Money Podcast with me, your host, Andy Duncan. Today I'm speaking to Jon Matonis of the Bitcoin Foundation, who's also a writer for Forbes Magazine, and we're going to be discussing the Bitcoin revolution, which has been a lot in the news recently with the Cyprus events. Hello, Jon.
Hello, Andy.
From the beginning of the year, Bitcoin has gone from about $15 to $70 plus. Do you think that this actually indicates that we're in some kind of a speculative bubble with Bitcoin, or are people genuinely moving into Bitcoin more and more on a gradual and a sustained basis?
Well, I don't think that we're in a speculative bubble. The price has actually gone from 15 to 95 is where we sit right now during the time of this podcast. Cyprus has been interesting from a number of angles. We didn't have a lot of Bitcoin nodes operating in Cyprus, which is quite sad because I think that some things could have been prevented had they been given the chance to use Bitcoin as an outlet. But I'm a student of the futures market, so things like this are fascinating to me. The reason that you're seeing some of the price volatility is purely driven by supply and demand economics. There's a fixed supply of Bitcoin on the market, and we've seen demand surpassing that. The other thing that you're seeing is liquidity and margining like futures markets would not necessarily be available. So we're looking at a bootstrapped currency that has to come into existence and define its own market from scratch. I expect the futures markets and some of those other things to evolve in the future, which would give some of the risk management available to the large corporates.
Where would your choice be for a futures market? Would it be somewhere like Singapore or somewhere else, or would it be New York or London?
I think it's going to be one of the smaller jurisdictions, and I say that because of the regulatory concerns. I don't think that a London or New York futures exchange for Bitcoin would be given as much latitude as it needs to get off the ground in these early days.
Some people have used Bitcoin for trading, so they get some Bitcoins and then they buy some stuff with those Bitcoins. But do you think it's good for both trading and investment?
Yes, as I mentioned before, it's forming its own asset class. It's becoming its own asset class alongside of the precious metals and equities and bonds. You can trade it, but like I mentioned, you're not trading it on margin at the moment. You're trading it at 100% value. So you have to be careful of that. It's better to not have the margin, obviously, because you're not going to be magnifying your losses, but you're also not able to magnify any of your gains. So that makes it more suitable for an investment than a short-term trading vehicle.
Yeah, the kind of margin would start introducing volatility and things, wouldn't it? The big competitor for Bitcoin in the future is possibly gold or silver or some kind of commodity-based money. Now, the gold and silver ETFs are a good way to kind of ride a precious metal curve as long as you're trading regularly, but they lack a kind of the safety of the physically allocated gold and silver coins held in a vault. Do you think Bitcoin's going to be a serious competitor to these kind of precious metal ETFs?
That's interesting as well, because we're starting to see the early stages of some ETF type funds evolve around Bitcoin. They're long only. There's one such fund out of Malta right now that holds control to approximately 80,000 Bitcoin, which will be about 0.4% of the total Bitcoins ever mined. So that's a significant fund out of the gate right there. The difference with Bitcoin versus the precious metals on the ETF side is that Bitcoin would allow for greater individual security. With the precious metals, you either have to subcontract out your security or you have to handle it on your own with your possession, being somewhere that you control, either in your residence or a third-party vault. Bitcoin gives you the option to create not only backups, but secret sharing mechanisms among other individuals so that you have greater security control directly over your own asset than you would with something that's more easily confiscated like the precious metals.
Now, my head's beginning to spin, actually, thinking about the cryptographic mathematics required for a leveraged short Bitcoin ETF fund.
Right.
Now, we've mentioned ETFs there, which people use to trade the gold price. A lot of other people, particularly Gold Money listeners, are holding gold for other reasons, for safety reasons. Do you think Bitcoin is becoming or will become a serious rival to hard, cold bars in the hand?
Well, I think they're complementary. I'm a gold silver bug from the very beginning, and I don't think that the two are at odds with each other. I think it's complementary. You have two dimensions. You have a digital internet dimension and you have a physical dimension. So with the digital dimension, the digital world, Bitcoins are ideal for transacting there. They do require, however, that the internet connectivity and the electricity is in place to maintain the blockchain. On the other hand, you have gold and silver coins, which could function, purely as a face-to-face barter instrument without relying on anything like electricity or network connectivity. So that's why I say they're complementary. You may need one for one situation and you may need the other for another situation.
Isn't that the Achilles heel of Bitcoin, is that it is reliant on this electronic network? Doesn't that make it potentially in the future accessible to governments to mess around with and to tamper with it?
Well, if you're looking at a world where we have to worry about electricity and internet connectivity, I think we have bigger problems than just Bitcoin. You can pretty much take for granted now in modern civilization that we're going to have access to those things. It does create a choke point in certain jurisdictions, and we saw that in Egypt and Syria and other places. It's not immune to that, but it will be routed around. Those will be jurisdictional episodes. In the long run, Bitcoin is based on mathematical principles rather than chemical principles of chemistry, such as the way that gold and silver is based.
There are two group objections to Bitcoin that I can kind of think of. I'm going to call one the minority view and one the majority view. We talk about the minority view first. There are some diehards in the Austrian school, and that's particularly followers of von Mises' regression theory of money, who think that because Bitcoin lacks a grounding as a store of value, because it's not backed by anything like gold or silver or whatever, and it lacks value in and of itself, that it can't be accepted on a theoretical basis as a genuine money. Now, do you think that this kind of objection matters, or should Austrians, hardcore Austrians, just be happy to accept Bitcoin as a genuine free market money?
Well, I don't. First of all, I don't think it's a settled issue. I know just as many Austrian economists that are in favor of Bitcoin and recognize it as legitimate medium of exchange. I know just as many Austrians that feel the other way. So it's far from being a settled issue. You have to consider, though, that in the 19th century, early 20th century, there was not anything like the internet. So a decentralized store of value that doesn't rely on a government or another third party was something that they couldn't even imagine in the creation of theorems such as the regression theorem. So you got to give them a little bit of a pass on not contemplating that. There's also some excellent work being done on how the exchange use value of Bitcoin doesn't necessarily invalidate the Mises regression theorem. Peter Serta, for instance, has done a lot of good work in that area on looking backwards and justifying Bitcoin's existence through the emergence of bid and ask markets on price and liquidity at the genesis.
Some of these prominent Austrians who support Bitcoin actually include a kind of leader of libertarian fashion, Jeff Tucker of Laissez-Faire Books. But that leads me on to my kind of majority kind of objection. Is Bitcoin a really kind of geeky technocrat thing? And is it not just too difficult for ordinary people in the street to kind of understand and accept?
Well, it is geeky, definitely. And I'm glad to see people like Jeffrey Tucker getting involved. I've enjoyed his articles on the topic. I always say, though, to those people, or to the people who criticize it for being geeky, is that, you're paid in dollars and euros every day for the things that you do and for your job, but you don't really have to feel that you need an economics degree in monetary policy or fractional reserve banking to understand the machinations that go on. People consider it voodoo, which it is, but that doesn't prevent them from the acceptance. I think it's going to be the same way with Bitcoin. There are enough cryptographers in the field that have been stress testing the open source code, that have analyzed the cryptographic primitives that make up Bitcoin. So anything that needs to be found will be found. And I think the general population will rely on the open source nature of the Bitcoin protocol for its trust, just like they don't necessarily have to understand what goes on behind the closed doors of the Fed. To get to your other point, though, of how it can be easier to understand, I think we're in the process of getting towards more and more user-friendly apps. And the user-friendly apps will be critical for the mass adoption.
I think that's why it's good where Bitcoin Foundation will be able to kind of authorize those apps or say that these apps are good and these ones aren't so good and everything. Because then people will trust things a bit more. Again, as well, I think that people use credit cards and they have no idea what's going on when they press their PIN numbers in. And so on.
That's right. That's right. Knowledge doesn't preclude the usage.
Whenever you try to explain fiat money to most people, their eyes glaze over and then they don't believe me. So if you can buy tins of beans with Bitcoin, I think everybody should be okay. Okay, now let's go 10 years forward in time. I just want you to imagine this world. The euro, the pound, the yen have all collapsed. The dollar's the last man standing, but it's also kind of on its last knees in a kind of Doug Casey fashion. Do you think that Bitcoin is going to become possibly a world reserve currency? Will it just be one amongst many different things like gold and silver and various other things? Or is it a temporary phenomenon?
Well, I love these 10 years in the future type of questions because cryptocurrencies are ideally suited to that. So it may not just be Bitcoin as the only cryptocurrency, but I do see a strong future for cryptocurrencies in general. And if you believe in free market money and monetary competition, then you can imagine a playing field where there's several cryptocurrencies. They can definitely be among the reserve assets. If you think that Bitcoin is somehow digital gold, then gold is analog Bitcoin. I see nothing that prevents the reserve asset nature of Bitcoin. But I think in the scenario you're describing, what's probably more interesting, more important, is that there won't be the capital controls that we see today. Bitcoin won't be subject to capital controls. It's borderless currency, so those controls will be less meaningful. We'll also see some impact, I believe, in tax policy. It'll be less effective to tax income directly, and I believe you'll start to see nations shifting towards consumption-type taxes, where it's more easily measured. Bitcoin will have those large effects.
Governments aren't going to like the fact that they can't introduce capital controls and they can't control money. Do you think that they'll use the kind of ready-made excuse of Silk Road and various other places to try to control Bitcoin out of existence and try to take control of it, and also maybe produce a kind of global government fiat currency, a kind of super dollar?
Well, there's no going back from where we are now. Now that the cryptocurrency Bitcoin genie is out of the bottle, it really, in the long term, does spell the end of national fiat currencies. They may try several things, but the genie's out of the bottle, and we're going to see how that plays out. The super currencies, I mean, those attempts are already being ignored somewhat. I don't think that people take an IMF/UN type of currency very seriously right now. A non-political decentralized currency like Bitcoin would be far preferable to a global currency that is backed or issued by an intergovernmental agency.
Now, we've got various companies like Amazon with the one coin, and other companies like Walmart and Google are interested in kind of international global trade. Now, you liked my 10-year question earlier. How about a 1-year question? Do you think in 1 year's time we'll all be able to buy goods on Amazon and Walmart and various other places with Bitcoins?
This is an excellent question, and this will be the sticking point. The exchanges and the large merchants are definitely the vulnerable endpoints in the Bitcoin ecosystem. And we saw that recently with the FinCEN guidance that came out on virtual currencies, where they described everything about Bitcoin except using the word Bitcoin. And my feeling on that is that Bitcoin is suitable to those merchants today. If those large merchants that you're discussing, Amazon, Walmart, and the like, were able to consider the amount of savings on payment processing that they would save by switching to something like Bitcoin, or even extending their international global reach into 60 plus countries that aren't served today by PayPal, they would be able to realize the benefits of an international global cryptocurrency like Bitcoin. Now, because they're so large, though, they will come into the sights of the regulators. And if you mentioned 1 year, if you see something where there's an attempt to ban Bitcoin acceptance among the large merchants, because the large merchants have to comply with a host of other laws. They're not going to violate a law that says you can't accept Bitcoin for payment of product. What you'll see then, I believe, is that you'll start to see an element of jurisdictional competition. There will only be certain jurisdictions that don't allow merchants to accept Bitcoin, and that business will tend to move then to other jurisdictions. I believe that will also start to happen with the Bitcoin exchange business. Consider, Andy, for a second how U.S. citizens are the only ones that cannot gamble online, pretty much. And the online casino industry has gyrated over the years to jurisdictions like Malta and Gibraltar and Isle of Man. those jurisdictions open themselves up to that type of business. And as a result, they have large functioning economies around online casinos and online gambling. So I expect to see the same things with Bitcoin in terms of jurisdictional competition.
It's strange, isn't it, how gambling and one other global internet industry seem to take the lead in internet usage. Also, as well, they don't seem to have taken into account the fact that the bigger they make these government currencies, the quicker they collapse. When they're small, like the Swiss franc and the Deutschmark and so on, they last a bit longer. Now, that brings me on then to what I'm going to call the Doug Casey objection, that there will be, I mean, if you're going to speculate maybe on Bitcoin and pay $90 for one in the hope it's going to go to $290, will there be, do you think, Bitcoin 2s and Bitcoin 3s and other kind of competing cryptographic currencies with possibly better architectures? Do you see that that is maybe going to be a long-term strategic problem for the current Bitcoin?
The Doug Casey objection. I love that. I would love to sit down with Doug and discuss Bitcoin, because I think I fall right in between the two generations when it comes to gold and cryptocurrencies. So I hope that Doug takes a more studied look at it. But in terms of his objection, though, he may be right with the competitive currency situation, but I don't think that he's necessarily looking at the network effect. And Bitcoin, as the first one out of the block, or the Bitcoin original, has tremendous power and market staying power through the network effect. Just like you would see with things like the VHS standard. It wasn't necessarily the best standard, but because it was first, it benefited from the network effect and the pervasiveness. And it's the same thing as languages. Bitcoin usage evolves the way a language would evolve. It doesn't necessarily have to be the absolute best to be the long-term winner, but at the moment, it has the best features. Now, if something were to come along in another iteration of Bitcoin, where the open source software was modified and then a new Genesis block was launched to compete against the original Bitcoin, there's probably over 50 different instances of that today. None of them have garnered much market attention, but I don't rule it out, and I think it's quite possible if they could introduce new features that the market requires that the original Bitcoin wouldn't support. I'll give you an example of that. Something like built-in anonymity for Bitcoin transactions by default, so that you wouldn't have to jump through so many hoops to make your current Bitcoin transactions as anonymous as paper cash transactions today. If there was another Bitcoin version that was able to do that, they might be able to eat into some of the gains that we're seeing from Bitcoin on the network effect.
Yeah, I didn't want to get technical in this interview, but all the transactions are recorded, or at least the last few, aren't they?
Well, they're recorded on the public ledger as to what they are and how much they are, but they don't necessarily link the who. It's possible to link the who through traffic analysis and network analysis of the IP address, but that's why I refer to it as user-defined anonymity, because the user can set how they want their own Bitcoin transactions to operate by using Tor, for instance, or by structuring other methods of exchange.
There are some conspiracy theories about Bitcoin. The main one being that I've read is that Satoshi Nakamoto, the creator of Bitcoin, is actually a group of men and women within the NSA, and they've got some kind of insidious plot in their mind to kind of hatch in 10 years' time. However, as you said earlier, Bitcoin is completely open source, and if you've got enough kind of computing talent, you can see the complete architecture. What do you think of these conspiracy stories? And are they completely irrelevant anyway because of this open source feature?
Well, you're right. I don't give them much credence, because even if it were to be true, the open source nature would reveal any kind of a backdoor, so it wouldn't be very effective. But that doesn't mean that we should discount any of the projects that came out of the government. The internet was originally came out of the government as a defense-related project, and Tor, which is an anonymous network, came out of the U.S. Navy. So those projects have actually turned into great things for the advancement of privacy and liberty. Now, going back to Bitcoin on the conspiracy theory, one interesting thing that's been discussed is that I could see how the government or the CIA would especially want Bitcoin to survive, because it's an excellent way to pay informants in the field without leaving a traceable chain through banks.
Now, John, just another conspiracy theory for you. If you were a member of a government body such as the IMF or the World Bank or someone, or the Federal Reserve, and you wanted to control Bitcoin, how would you do it? And how would the people behind Bitcoin resist that attempt to take it over?
Well, Well, right now, Bitcoin stands as the largest distributed computing project in the world. It has surpassed SETI, which was the search for extraterrestrial intelligence, formerly the largest distributed computing project in the world. And Bitcoin is now the largest. So the computer power required to overtake the Bitcoin network increases every single day. The times for governments to disrupt that would have been in the earlier days, because it becomes increasingly more difficult to launch that type of an attack. If they were to launch that type of an attack, though, it would be noticed, and the attempt to overtake the blockchain with 51% or more of the computing power would be noticed, and you would have a fork, and the invalid chain would no longer exist. So the economics are such, it's brilliant the way Bitcoin protocol was designed, because the economics are structured in such a way to encourage legitimate participation of mining on the network and collecting transaction fees and rewards, rather than attacking it from the outside. So it's actually more beneficial to join as a legitimate participant. Now, barring that, though, there's also the attack that you mentioned earlier about disabling the entire internet. I don't see that as a realistic approach, though, for governments in a modern economy, because it would mean bringing down the internet banking system, the commerce on Amazon, and I don't think that any government would want to jeopardize that in order to only stop and prevent Bitcoin. Furthermore, if you look at governments' attacks on the BitTorrent technology, which is used in the downloading of music and film and books and such, they haven't been able to even stop BitTorrent technology. And that's gone on and on and on, while they tamper and fiddle about at the edges, trying to put downloading teenagers in jail. So if they actually had the ability to stop a decentralized network, they would have done it by now in the BitTorrent area.
After the tectonic events in Cyprus, do you think lots of people in Europe are going to be draining their bank accounts soon and buying Bitcoin with the preceding euros?
Well, not all, but I certainly hope that some of them do. There was a Bitcoin ATM launched in Cyprus the other day, which I found quite interesting. It allows Cypriots to not only buy Bitcoin with cash, but also to sell Bitcoin for cash. So it's a two-way functioning ATM, and I hope that we see a lot more of that roll out.
So what are your plans then at the Bitcoin Foundation for spreading the use and knowledge of Bitcoin?
The Bitcoin Foundation was started about 6 months ago, and the main drive there is towards standardizing the Bitcoin protocol. We also have launched initiatives for compensation to the developers, the core developers, and we also have put in place a grant program that will fund initiatives for the advancement of Bitcoin. And those don't necessarily have to be development-related initiatives. The Bitcoin Foundation doesn't really have a political agenda, so we're non-political. We only want freedom of choice in currencies, and we'll promote Bitcoin as an alternative protocol. And that's the mission of the Bitcoin Foundation. It's going quite well. We're doing a conference, I should add, we're doing a conference in San Jose during the month of May this year.
And do you have a website for that?
It's bitcoinfoundation.org.
So thank you very much for your time today, Jon Matonis.
Thanks, Andy.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.